Hello, this is Jennifer Fox with Fox Property Management. We're having a conversation with Ananda Lantaff, professional mortgage source. He's been doing mortgages in Boulder County in Colorado for, what'd you say? How many years?
22.
22. Oh my gosh. All right. So, we've had a conversation about, understanding interest rates. We've talked a little about the current market conversation, and then it's buying power and affordability. So buying power and affordability. How do interest rates affect buying power more than home prices sometimes?
Yeah, I mean, right now people are very payments sensitive rather than price sensitive. And so just to, kind of put that in perspective, the monthly payment affordability right now is affecting everyone with the current interest rates. A current $400,000 loan, let's say, with the rate of 6.25% is almost about $500 a month higher than when the rate was 4.25%. So just that
Mm,
2% difference, is $500 a month. So that same $500 a month difference, I mean, if you look at purchase price, that's almost about an $85,000 increase or decrease, so that borrowing that extra 85 grand, is that same $500 a month. So, you know, purchasing power can be affected for sure. If somebody had a certain budget, maybe they're only approved for that amount, or maybe they, just only want to spend X amount because they're used to paying that much in rent. Their purchasing power definitely isn't going as far with these higher interest rates.
yeah, what options do buyers have that would help them maybe are there some options that a buyer could put in place with their mortgage with you as they're buying that would kind of change that narrative a little bit?
Yeah, I mean, in the old days, you could look at ARMs, an adjustable rate mortgage.
Okay.
Those adjustable rates had their time and place and worked well as long as you understood them. Just to let everybody know that adjustable rate mortgage typically has a set term where your rate would be fixed. And so, you could go for 3 years, 5 years, 7 years, 10 years, for that set period of time. Hey, that's what your interest rate is going to be. But after that set amount of time, it can adjust and then we'll go with your index and your margin to then get your new interest rate. Now, back in the 2000s, we weren't necessarily in a falling rate environment, but they were very popular back then. And you could save a little bit in rates by going with one of these adjustable rate mortgages. Now, if I price one out, a 7 year or 10 year is going to be more than a 30-year fixed. And a 5 year arm, if it saves you anything, it might just be like an eighth in the rate. And so it's not really worth it for a lot of people, to look at those arms. And so right now, instead of the arms, what we're trying to do is if you can get some seller participation, we're looking for some temporary rate buy downs. And that's a pretty good tool to try to help, get people to adjust to these interest rates where they are and kind of, help their payments at first with a lower interest rate.
Yeah, yeah. Oh, that's interesting. Um, okay, that's great. So I think the next topic I'd love to discuss is first-time buyers and their hesitation. So kind of what you're seeing in the market around that. Many first-time buyers feel stuck waiting for rates to go down. What would you typically tell them in this moment?
Yeah, I mean, again, you don't wait around for rates if your situation warrants it. I mean, if you're tired of renting, if you're tired of the upstairs neighbors stomping around, if you need more space, maybe you need a yard for your dog. Maybe you don't have a dog because you don't have a yard. Whatever it is, starting a family. Don't put those things on hold. I mean, it's one of those things where your life is going to progress, and you're going to go through these different stages in your life, and home buying is one for a lot of people. A lot of people are putting this off, though, and I think I just saw a statistic that the average first-time home buyer now is 40 years old, and that's just a
Yeah.
huge jump from where we were previously. But I think people, unfortunately, are putting off, buying a home until these interest rates get to where they want them to be. But we could be waiting around a little while. So it can be frustrating, but you can't look back and kind of say, oh well, a few years back the rate was this or the payment was going to be this. You just kind of have to adjust and adapt to the new market conditions. And if it works for you, great. And if it doesn't, that's fine too. We're not trying to force anything on anybody, but we just want to
Yeah.
educate people and let them know, here's what it would look like.
Yeah, so there's not really a perfect time, right? I mean, if you wait, you can't really wait for the perfect time. You could just keep waiting and waiting.
Yeah,
Or
I
you get
mean,
lucky because your waiting did end up helping, but
yeah, I mean, you probably should shift that focus to, is there a perfect house? A perfect place
right.
for you. And if you find that perfect place, then, we'll get you the best type of financing that we can at that given moment. Hopefully everything what comes together with, meeting your, payment and equity objectives and, all that other type of thing. But, there isn't such a thing as a perfect rate. Sure, everybody wants it to be as low as possible. But, again, like if you can get some sellers that want to, are motivated to sell and they can help you with a temporary rate buy down, that can help first time home buyers right now.
Yeah, and to get clarity on that, that's only if you're going to be an owner occupied property, right? You can't get a buy down if you're an investor. Is that true?
Correct. Yeah.
Okay.
Yeah. You can only get those on a, primary residence.
Okay, great. And then you answered my next question, which was what should they be focusing on instead of the rate? And what I heard you say is buy the property you want in the location you want,
Yep.
because there will be opportunities in the future to refinance or do other things. But the focus rather than the rates might be just getting into the right property. And it obviously has to be one you can afford, of course, but that should be more of the focus right now because there will be opportunities in the future.
There should
Hopefully.
be, yeah. I mean, we all kind of agree, and even Fed Chairman Powell, even he will agree that lower interest rates are likely on the horizon. I don't like to push buyers into situations saying, "Oh, the rate doesn't matter, just buy now." Just you can afford it. Just we'll refinance you down the road. A lot of things could happen where somebody might not be able to refinance. Maybe they're going to be newly self-employed, or maybe they lose their job, or maybe they have a credit
Mhm.
incident, and all these things. So you can't just tell people that don't forget to worry about the rate, forget about it. It's just we'll get you in this loan and we'll refinance you later. That's a good plan, to try to have, and we can explore that and kind of map it out. But you can't go into it just bypassing all the concerns about interest rates, because I mean it is real.
Yeah, yeah. Okay, so pivoting a bit to investors and rental property owners. So for investors and rental property owners, how do interest rates impact investors differently than primary home
Yeah, I mean,
buyers?
investors, they can be a little more sensitive to the rates actually, just because it will affect how much the property cash flows.
Right.
That's just kind of a big concern for, somebody that's looking to either, turn their house into a rental property or just purchase a rental property straight out is, how much can I get for rent? What's my mortgage? What's the cash flow going to be? Investors weren't as sensitive to rates, back in the 2000s. I mean, just because they could see very healthy appreciation, from year to
Mhm.
year. So even if they were negative $500 a month, that's 6 grand a year, they knew that property was going to likely appreciate more than that $6,000. And, at the end of the day, on the books, everything would come out and be fine. But these days, investors are just a little bit more skittish. They're not so sure, about these, the levels of, prices and things like that. And if we are going to continually start to appreciate, long term, I'm sure things are going to be fine. But if someone's looking at a shorter term, investment opportunity where it's, 2 years, 4 years, 5 years, that might be a little too short for them to, have a negative cash flow like that.
Yeah, okay, cool. Are there still smart ways to finance rental properties in today's environment?
Yeah, of course. I mean, the biggest obstacle to a lot of people getting into buying an investment property is the down payment. Technically, you can do 15% down, 20% down, but those rates are going to be a little bit higher. And so the sweet spot is where you can do 25% down.
Okay.
That's the best and smartest way to try to get into, buying an investment property. Some people think that, oh, well, I have a little bit of extra cash to buy an investment property, but, I won't be able to qualify. Just, I not necessarily working paycheck to paycheck, but it's not like, how am I going to afford this mortgage that could be, $2,000 a month or whatever, or even higher. But the good thing is that when we look at someone qualifying for an investment property,
Mm-hmm.
we can use 75% of that projected rent income to help offset what that mortgage is going to be. And so really, if someone does have only a few $100s extra, let's say, on paper, to go into their debt to income ratios and things, if you have the down payment, usually you can qualify for that investment property.
Oh, that's cool. So, where do you get that rental rate? Do you call companies like ours and you ask for a market rental rate value, or
It'll
who?
come from the appraiser. And so
Okay, the
the
appraiser will do
the
that. Yeah.
the appraiser is going to contact. I don't know if they contact individual landlords, or if they like property management companies, or if it's
Hmm.
just pseudo public information. But they'll do the same thing when they look for sales comps. They'll look for rental comps. And so they'll say, okay, so within a mile radius, how many rental properties are there in a 3-bedroom, 2-bath like our subject property? How much is that getting for rent?
Yeah. Okay. So how important is it, or what sort of value do you add to investors as they're planning long term? Is it helpful for them to work with you directly, or do they work with you only in the purchase, or are you kind of, can you help people plan?
Yeah, I mean, if I love helping people that start out, like let's say they'll buy their first house. They'll put kind of a minimum amount down. We'll get them in with the first time home buyer program, but after a couple of years they're ready to move on. So how do they transition, from buying this place, turning their old place into a rental property, all those types of things are
Hmm.
great and, fun for me to actually kind of help people kind of, identify and work through. So, I mean, a lot of investors will start out like that, where they'll turn their old primary into a rental. And, how do they get the cash out of that old property to buy the new one? Well, luckily, you don't need 20-25% down to buy a new primary. So you turn your old one into the rental, you get a little money out so you can put, 3%, 5% down on a new primary. And then all of a sudden you have an investment property. You didn't buy an investment property, but you just turned your old one into one.
Right.
Um, Other people that, are just straight out investors. Yeah. I mean, if somebody's got a boatload of cash, there's still an awful lot of cash deals out there, happening. But if I can get and talk to a couple of them, it's like, hey, instead of buying one property for $600,000 cash, why don't we look at buying two properties, 450, you can put 25% down, and then you have two rental properties. Sure, you have loans on them, but then you have two appreciating assets. You have two of everything, to help kind of get you started. And so just being able to walk through that with somebody. What's their long-term goal? How much do they have now? Or, oh, I might be getting a little money from family, X amount of years down the road. I don't have my Series 6, and so I can't get full out, investing advice and things. But,
Yeah.
I do think it's helpful to, establish a relationship with somebody like that and kind of walk through their plan, see what the best course of action is, how they get there. But then again, a lot of it is just turning those, normal people, let's call them, into those investors, and just starting their real estate empire that way.
Yeah, that's interesting because that is a conversation we have with people all the time. The truth is if you have one house, let's just use easy numbers, that is a $500,000 house and it rents for 4,000 a month. If you take that 5,000 and or 50 500,000 and you split that into two properties, 250 each, you will make more than 4,000 on the two. You will make more like 23 or 24 and 24. You'll make like $800 more a month,
Yeah.
right? So
Yeah.
we see that successful for people all the time. So when they take that money and split it into multiple assets, they tend to make more on a cash flow basis too. It's not just on future appreciation. It's also in the moment. It just I've never seen it not work that way.
Absolutely. Yeah.
And so I do think that's really smart. And the biggest challenge people have right now is someone who wants to do that. Their problem is selling, selling to buy, because it is such a good time to buy. If you're a 1031 exchange, you have cash that you need to do something with it. It is a great time to buy.
Yeah.
Um, there's a huge opportunities out there. So, okay, that's really helpful. Um, so let's move on to local perspective. All right, so the next topic is local perspective. So why does we kind of already talked about this, working with a local lender matter, especially in our market. I still think you could, I personally have experienced what it's like to have a local lender work on a deal versus like an online mortgage company. I mean, it is a huge difference in the experience of for the buyer around and the communication between the buyer and the seller and title is so different when it's someone like you who is right there in the communication. And even, I don't think everybody does this, but you show up to closing, or at least I've witnessed you show up to closing. So maybe you could speak for, another minute or something just on that value.
Yeah, I mean, I touched on it before that just, working with someone local does have its advantages. Just namely that you're working with somebody that's, vested. I'm vested in you. I'm vested in your clients. And so, I'm doing everything I can to make sure that, your clients can get under contract. That's the first part. Did I do a good job pre-qualifying somebody? Am I thorough in, going through all their documents beforehand? If I am, then that leads me to be able to call that listing agent, and I can call that listing agent and say, hello, listing agent. Not only, have I pulled their credit, but I've reviewed their tax returns. I looked at their pay stubs. I looked at their bank statements. Everything looks super clean and easy on this deal. I'm local. I'm essentially, you're going to hold my feet to the fire, where if I don't perform, all of a sudden, I'm not your friend or doing any business with you anymore. And so, when you're dealing with somebody local, you have somebody that's vested in everybody's interest. Somebody that's online or somebody that works for a large bank, if they screw up the loan, it's just kind of like, oh, all right, well, I got another one on my desk over here. And so, they don't earn them referrals. And so, by me establishing the trust, building a relationship, not only with the clients, but with the realtors as well. You just don't get that when you're not working with someone that's local.
Well, back in the day, a few years ago, when there'd be 10 offers on a property, the lender was a critical piece of a seller's consideration. So, for example, if I was selling a property and I had several offers in, the strongest offers always came with the lender who made a call on behalf of their
Yeah.
buyer.
Yeah.
And it made a huge difference in just the experience because we're like, all right, this is a strong buyer because when you look at the dates in a contract, that final loan approval is within a week of closing. So if
Yep.
you're under contract with someone who's not necessarily got a great lender or isn't necessarily a strong buyer, there's some risk there. You could be off the market for 3 to 4 weeks and then find out last minute no loan approval, right?
Yeah.
So I do think, I mean, personally being in this business, the value of the lender being able to advocate for the buyer, but also help them move this along and get all the things that they need and be prepared to be buying the right property at the right price makes a big difference because it doesn't help people to just have somebody funding a purchase they can't afford or a purchase they're not ready to make or be pushing through something when they don't actually have all the information. So I have personally experienced the benefit of that of the local lender. So I don't know if you have anything more to say to that, but
And I still am amazed. I get calls from the listing agents, and they're amazed that I pick up. They're
yeah,
like, "Oh, you picked up the phone." I'm like, "Well, yeah. Why wouldn't I pick up the phone?" And they're just like, "Well, you don't see that a lot. It's hard to come by. So
yeah,
just yeah, I'll pick up the phone if I can."
it's great. Okay, so we're kind of getting to the end. We're sort of moving into advice and takeaways. So I've got just a few things maybe you can answer. So, first, what's the biggest misconception people have about interest rates right now?
That's a tough one because we're always fighting the media. We're always fighting, the conception that rates are going to come down, or maybe they've come down just because they heard that the Fed lowered rates. Again, the Fed, he helps set the tone, but he doesn't directly affect our mortgage interest rates. He'll affect things like prime, so your credit card loans, your car loans, your HELOCs, your second mortgages and things, he will affect those. But, our market doesn't directly follow, the Fed funds index rates. We have our own mortgage-backed securities. And so he can set the tone, but the biggest misconception is that, oh, well, the Fed, he lowered rates 1/4%, back in October, and then he just lowered them 1/4% now in December. So we're 0.5% lower than we were, right? No, we're not. But it's it hopefully will get there, but there's a lot of people, holding their breath through these lower rates. And again, I don't know if I would hang on for, too much longer. If again, all the other things come into play and they line up, you might as well just pull the trigger.
Yeah, kind of go for it. What's one thing that you wish every buyer, and I think we'll talk maybe first time home buyer or primary home buyer, understands before they start the loan process? What would be like a key thing for them to come in with an
Yeah,
understanding
I
of
mean,
you?
the frustrating thing is that some people, I guess, believe what they see on the internet. It's just like, oh, I saw this place has, a 5% mortgage. And you're like, okay, that can't be real, or there's a lot of extra fees, and
Right,
points, in that rate.
right.
And like, oh no, I was walking through King Supers and the bank in there had a sign that says, the interest rate is this. Well, maybe that's a 15-year, or maybe it has a couple points, or
Yep.
it's one of those things where there's just a lot of. I mean, we are fairly heavily regulated as far as what we can, advertise out there, but somehow, you go online and you're always going to see, some lender somewhere that, has this rate that's just, outlandishly low. And if it's too good to be true, it often is. And so, we
Right.
all, to some extent, we all get our money from the same place. And so, we touched on this a little bit earlier, the difference of, working for, a smaller local lender versus a large, kind of bank. Because I'm smaller, because our company, is a little more nimbler like that, we don't have to have as large a margins. And so the interest rates that we are able to offer people, traditionally are, very competitive. We can't be the lowest all the time, but, we're consistently, in the running for the top three there to, to be, the lowest. And so, give your local loan officer a chance. If it's not me, that's fine. But just still, don't believe the rates that you see on the internet. There's always a catch. There's always some extra fees. And you just kind of have to be a prudent shopper and trust your loan originator.
Yeah, I think a lot of us have learned that from like booking tickets, right? So you go on, you see the two airlines, and one you get everything included, and the other it's way less, and then you got to add everything up, and it costs the same anyways or
Yeah.
more,
Yeah.
right? And so I think a lot of us have had that experience. So it's good to remember that sometimes just working with someone who you trust, who's an educator, who will follow you along the path makes a lot more sense than sort of winging it based on some advertising out there that could be a little bit deceptive. Um, so if someone is thinking about buying, right? What's the first step they should take? What's next?
Yeah, I mean, obviously getting in touch with your realtor, and your lender, working kind of in conjunction. The realtor can kind of help you narrow down, where you're looking for and, kind of the price range. And then, that's where your lender will come in and just, run all the figures and numbers on that as far as, okay, well, yeah, what would this purchase price look like with this much down? And then we kind of graduate to, okay, well, can I qualify? And so we start talking about, their income and their credit and their liabilities and everything. And it's so good to have that done ahead of time. I mean, there's plenty of times where I've heard a realtor and they referred someone to me and it's just like, oh, well, they're a doctor, or oh, they're driving a nice fancy car, they shouldn't have any problem qualifying. I mean, not to bash on anybody, but sometimes those are the two worst clients that you have, just because the books don't look the same on the inside as they do on the outside. And so you want to get pre-qualified. You want to know where you stand. You want to know what all the options look like, and that's my job, is just to kind of go into it. Ask you what's important in your loan and your finances, your long-term and short-term goals. And make sure that we kind of couple it with the right mortgage, the right house, and make it all work and come together. But if you're trying to do that on a Saturday evening, I mean, I'll help you if I can, but it helps if you do it way beforehand.
Well, the other thing I was thinking about is I know of somebody who was wanting to buy property and they didn't get pre-approved and they were looking much higher than what they could actually be approved for. And so it was really disappointing for them, right? Like, and the truth is that in my experience, the first thing you should do is understanding your buying power before you even talk to your realtor. It's like the first thing. It's like because I've also experienced that if someone comes to you, for example, and talks to you about their buying power, you can look and advise them. Someone might need to wait a year. Maybe there's some work they can do on their credit. Maybe there's some money they can save. Maybe there's some gifting opportunities they could think about. Maybe there's, some other ways that they could prepare and that you can help them do on the front end. But in my experience, having a buyer or an investor come already knowing what the range is and their range of comfort, but also where they get approved, helps them zero in on properties much easier and also sets their expectations. And so it would seem to me, and especially in this world, in this moment, is understand what you can afford, what your buying power is, so that you can start searching for what actually makes sense. It's the same thing. If you're an investor and you want to buy a property, and even if you're approved for it, it's really important to understand the rental market. We just got a new property that Fox is managing where the buyer was told, oh, this place will rent for such and such amount, and bought it. And it's renting for like 1,000 a month less.
Oof.
It is just, it's just wasn't, they weren't given accurate information and they made the decision based on that. So
Yeah.
again, whether you're buying and you are out in the market looking without information about really what your buying power is, or you're buying as an investor and you don't really understand what the cash flow coming in is going to be and how that's going to impact you, it really makes sense to be talking to you on the lender side, talking to us on the property management side, talking to your realtor, whether it's us or somebody else that you work with around, getting the right team around you so that you're making good decisions. And so you're not wasting time looking for property you can't afford or property that where it really doesn't make sense to buy it as an investment property, which is what we're seeing more of, right? People are having trouble making those numbers work. And
Yeah.
so it just makes a lot of sense on the front end to really be thinking about, all of, starting with what can I afford seems to be, to me, that's the starting spot. What can I afford?
Well, and
And
a lot of people, they start really, they don't know where to start, right? And so
yeah.
they're just like, well, do we even know what we can afford or what this would look like? And
Hmm.
yeah, I mean, we start with people and sometimes work with them, like you said, for 2 years plus. It's just like, all right, well, you're not in a position yet, but here's what you might need to do, and here's what's you have some student loans, you have some credit card debt. Let's try to hack that down, or let's fix these medical collections. So there's some things that we can do with your credit, but some of those aren't going to happen overnight. Sometimes the credit fixes and stuff might take 6 months or a year. And so let's get those cleared up, but we want to put them in the best position they can be, for when they are ready, that they can, be a good buyer and, get into that house.
Well, and the process with you is quick, right? I mean, if someone's interested in understanding their buying power, it's a conversation with you. You gather a little bit of information to sort of get a general sense of them, right? I mean, this isn't a huge, onerous process. This is pretty quick.
Yeah, I mean, I don't have to collect all the pay stubs, W-2s, tax returns, bank statements, and all that thing for an initial conversation. Like oftentimes just kind of be like, hey, all right, tell me a little bit about yourself. Tell me what you're looking to do, and we can just kind of have a conversation. It's obviously free. I don't charge anything up front to my clients, for the consultation or anything like that. And then even when they get their mortgage, I don't get paid, until the very end when it closes. And I don't get paid from the actual loan or any of the fees in there. I get paid from the investor, when the loan closes and we sell it to them. So, it's good for someone to know that, yeah, all my services essentially don't cost them much or anything.
Right. There's a lot of investment in time and energy and all that. And obviously it needs to be monetized. But yeah, that's good. That's good to know that. So, let's see if you wanted people watching this to take, one takeaway from this or one thing that you wish people knew or something you'd like to leave people with, what would that be?
Yeah, I mean, I saw this meme, and it was a skeleton sitting on the bench, and right under it, it said, people waiting for rates to drop. And I mean, you can keep waiting if you want to, but we've been in this situation for 2.5+ years where we're all like, rates will be coming down. They should be coming down. I mean, I think we're going to be around here and stuck, for a little while. And to be honest, you know, if rates start to drop a little bit, we're at 6.25 now. Okay, so noticeably when they get to 5.75, is that going to make a huge difference to people when they get to 5.5? Is that going to make a huge difference to people? I mean, the payment difference and the numbers there, aren't really going to change things all that much, all that drastically. It's not like that person's going to qualify for, that much more house if the rates drop a quarter or a 0.5%. Sure, it's going to have, some effect on things, but, it's not going to, all of a sudden just have this, everything's going to be, this moment of clarity or permission or whatever it is. Just because rates drop a 0.5%, it shouldn't make that big of a difference for someone qualifying. So like I said, I mean, if they're in a position to where they need to want to buy a place, the upgrade, tired of renting, all that type of thing, don't put those things on hold. Don't put your life on hold waiting for interest rates to go any lower.
Yeah. Yeah. Okay, that's great. Yeah, I hear you. And it's interesting too because prices, because of the lack of demand, prices have gone down. And if you are someone looking to buy a property that you are going to live in, between the prices being down and the sellers often being willing to work with you on a buy down, which could reduce your interest rate in year one by 2% and year two by 1%, which gives some time to adjust to that payment and time to adjust to maybe a drop in interest rates. It's a great time to take advantage of that, in my opinion. But I think that a lot of people are nervous about it, and so hopefully more and more people will start talking to people like you and getting information, starting to build some confidence. Because when you're first time home buyer, I say this to investors and other people all the time. It's hard to know how much the carpet's going to cost or the replacement of hard surface flooring in your house until we get an estimate. And it's the same thing. It's you can't know what you can afford or what your opportunities are or what it's going to cost until you look into it and you ask somebody and you start to understand. And so, again, gathering information is so empowering because once you have the information, you could choose. They work with you and they realize, you know what, I need some more time. I need to build up more this. I need my credit score here. I need to raise some more money. I want to put this much down, blah, 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 blah. But then you can plan. And it's the same thing if you're an investor in a property. If you need to paint and do flooring and redo the backyard, let's get estimates for it. And then you can plan. So I think that's the thing I'd like to leave people with is investing time and understanding your buying power allows you to then plan. And so if you have a local agent you can go to, like you, Ananda, who's willing to spend time with somebody for years as they sort it out because you're a neighborhood guy, you're local, this is you're going to run into them at the grocery store type of thing, that's a great place to start. Right. And then you get to make some choices. But I know people that I've worked with, they had no idea that they were capable of buying a property until they did this first step with you and better understood what they could do. And then it really empowered them.
Yeah.
So I think that's kind of my takeaway from my experience of working with you and working with buyers is getting them as educated as possible so that they understand their potential.
Well, and
And
we're not talking people into anything, right? And
no, no,
so
no.
it's one of those
Yeah.
things where it's just like, if it works out for you to buy a place, I'd love to be able to help you. And the one hesitation is just, well, it's just such a big responsibility, and it is, it can be daunting and intimidating at times. But I'm just like, well, you're always going to have to pay for where you live unless you move back home, right? And so either you're going to be paying rent or you're going to be paying a mortgage. And
Yeah.
so you might as well be paying a mortgage as long as it's affordable and as long as it's within reach and all those types of things. Paying a mortgage shouldn't be that much different than your commitment to paying rent. And so, it can be a little scary for some people, but
Yeah.
once you kind of map it out for them and put it all into perspective, usually they get excited to go, and we find a place and there they go.
Well, and I think a lot of it is it's the what you don't know stuff that is tough for people. So as soon as there's some education and better understanding, that builds confidence,
Yeah,
right? And so
yeah,
finding a good partner in whatever it is you're looking to do, whether you're buying a property and need a lender, need a realtor, need a property manager, need an insurance agent, need an attorney, whatever it is that you need, it's finding good partnership and people that you trust so you can get information and start making decisions. And nobody that I work with, it's like nobody is looking to push anybody into anything. They just want to provide the information you
Yeah.
need and develop a relationship where you feel like you have a resource. And so, Ananda, I totally know that's who you are. It's like who we are too. And so I really appreciate you taking time today to jump on. I learned a ton. This was super, super helpful. And
Yeah,
I think
great.
it's great. I'm hoping to share this with, people who invest, who have sent us their investment properties and are continuing to look at buying, but also, we have thousands of tenants that rent from us, and I think this is really interesting information for them. We'd love to empower them to become buyers too, and so we'll share this. And again, thanks for spending time with us.
You bet.
And we'll look forward to getting this information out into the world so more people have it. And yeah, enjoy the rest of your day.
Thanks for having me. I'll be here when you need me.
Okay, thanks, Ananda.
Thanks, Jen.
Bye.